Hey everyone, Matt Smith with Rebellionaire here. I wanted to share some quick thoughts on Shai Wininger's announcement today about the partnership with Tesla to insure Teslas with full self-driving. A couple just quick thoughts on this, and first of all, I thought no better place to make a reaction video like this than in a Tesla which is self-driving itself in the middle of some pretty heavy snow. We got about 3 inches overnight. My neighborhood has not been plowed, and it is just handling it like no problem at all. Which has just kind of become the norm. But a couple quick thoughts. We're obviously big Tesla bulls. We're obviously also big Lemonade bulls. So kind of seeing these companies together makes us happy in that regard. But even, just kind of putting aside, our interest in a deal like this happening, I think it's pretty interesting on the insurance side. And let me try to unpack why I think this is such a big announcement. So we know Tesla has been involved in their own insurance for several years now, but it really hasn't gone anywhere. So they've not expanded beyond the handful of states that they're currently in. I've heard mixed reviews from customers. Some people love it, get a lower rate. Others have been less enthusiastic about their rates, about their ability to get in contact with anyone at Tesla. And just kind of thinking about what Tesla's trajectory is from here, really their earnings future is all about autonomy and optimism. If they have a little bit of extra margin on the insurance side, sure, that helps. But honestly, it doesn't really move the needle in any meaningful way. So, thinking about what really matters for Tesla, it's about having the price adequately, that the price that their customers are paying for insurance adequately reflect the risk that that those customers are incurring. And with FSD, we know that it's already safer than humans. Shai said today it's 2 times safer, more than 2 times safer than the average human. That definitely corresponds with my lived experience with FSD, where I'm actually making more kind of dangerous mistakes when I take over than FSD is. But from a kind of business standpoint, what's more beneficial to Tesla than, let's say, getting a multi-billion-dollar book of insurance, that really is just going to get lost in the noise of their financials, given the size that they are and given the magnitude of the opportunity with autonomy and with Optimus. But for a company like Lemonade, where they're just starting the kind of early part of their growth process, they have effectively 0% market share in the car insurance market right now. So for them, this opportunity is huge and very worth pursuing. So for Tesla, I think the benefit's pretty clear. You want your customers to get better rates, and you can do that. If you can do that effectively enough, you'll actually be able to pass those savings on to your customers, such that your FSD take rate would increase. So one just very quick example: we know the FSD subscription price is $99 a month. So if they can get to the point where the average customer can save at least $99 per month by using Lemonade Insurance and having FSD do all the driving, then that actually becomes like a win-win, where it's better for the customer and it's better for Tesla because they should see FSD subscription take rate increase significantly. It's essentially an arbitrage-free opportunity, and as long as Lemonade is pricing this risk appropriately, it'll be a win for them too, because it unlocks a huge revenue opportunity. Just to give some context, Lemonade's average premium per customer right now is a little over $400 per year, and so if they were getting paid, let's just say $100 a month, that's $1,200. So it's like a 3x increase. Even though at $1,200 per year insurance, they would essentially be undercutting most insurance companies on pricing. So I want to kind of pivot to Lemonade now and talk about what this means for them. So this is one of the kind of concerns I've heard from some people is, okay, well, if FSD just gets safer and safer, that means the prices have to go lower and lower and lower. So eventually, like, you're just collecting peanuts. And then anytime you have losses, that just eats into your very small kind of revenue stream. Insurance at the end of the day is all about pricing risk appropriately. So what Lemonade has said in the past at their investor day is essentially that they want to keep the loss ratio. So in other words, how much are you paying out in claims for every dollar in premium that you're bringing in? They want to try to keep that steady and therefore be able to compete on price. So let's assume that FSD does get safer and safer, and the actual fair price to insure these Teslas on FSD continues to decrease over time. Well, Lemonade is actually happy getting lower revenue per customer as long as they're keeping, let's say, a 70% loss ratio. So they're paying out 70 cents on in claims and every dollar that they bring in on premium. So that math kind of works for them. And then what will happen as FSD adoption increases is eventually, because the price is so low, well, now you're competing on price, and so your market share can go from like effectively zero today to something much more meaningful over time. So this is why I think the opportunity is so big for a company like Lemonade. If you are one of the Geicos of this world, or Allstate, or one of the incumbent insurance companies, I think FSD is like a horrifying risk for you. Meaning, you've got a kind of set premium per customer that you're getting on the car side, some variability around that with safety and with what model of vehicle people are driving and that sort of thing. But overall, that number doesn't really change too much. So if all of a sudden, FSD is introduced, first of all, you've got to have like the technology stack in order to adequately price it, which most of them don't. That's why we don't see them integrating with Tesla the way that Lemonade is. But even assuming you could do that, well, now all of a sudden you're basically just saying, all right, well, over time, I'm going to decrease my premium per customer and essentially have revenue decreasing. That is not a compelling value proposition for these companies to go and chase. So I do think that this is, like a nightmare for, these incumbent large insurance companies. They either have to accept lower revenues and kind of declining growth over time, or they just kind of stick with the current business model. I think the MBA in me wants to point out, like, hey, look, we're like 98% plus, cars that don't have FSD and autonomy. That's still a plenty good prize worth fighting for. And so, like, we don't even need to worry about FSD. I think that's going to be the temptation for these companies. And I think what's going to happen over time is, okay, yeah, take rate's going to start low. And then, over time, people will buy FSD. They'll say, hey, this is a great value proposition. I'm actually able to pay for my price of FSD with the subscription. So, more and more people are going to switch to Lemonade insurance. And then what that's going to do is be leaving the higher risk customers left with the incumbent insurers. And so what's going to happen is they're going to have to raise their average rates because these good drivers, or these drivers that were using FSD, but on a Geico, which wasn't adequately giving them the discount that they deserve, because they're kind of pricing on averages. They're not pricing on your actual driving usage or your driving risk. So for those types of companies, you're going to have the best customers, meaning those that use FSD and are the lowest risk. They're going to leave, which is going to make your average claims per existing customer increase, which is going to mean you're going to have to jack up your rates, which is then going to incentivize the next kind of tranche of lower risk customers to leave and go do FSD plus Lemonade. And this is kind of a vicious cycle that I think is going to just perpetuate itself over time. And I have a sense that we'll kind of wake up in the 2030s somewhere with Lemonade having a dominant market share among vehicles that are equipped with autonomy and that are actually lower risk. They'll have lower pricing, but they'll still have great loss ratios because their AI is able to adequately price for risk, even at relatively low premium levels per customer. So I think this is just a win-win-win. I think it's great news for Tesla customers. I think it's great news for Tesla investors. Although I think the real news for the investors on the Tesla side is just going to be that I think this is going to incentivize an increased adoption rate for FSD and greater subscriptions. And then I think the biggest winner here is probably Lemonade. I think this is going to really accelerate their growth, not only in terms of premium per customer, but also there's going to be a lot of FSD owners in other states that have never used Lemonade for insurance. They get them for the car insurance. They are exposed to how great the product is to work with, how easy the app is, how simple it is to understand. And I suspect that some of those customers will bundle with pet or home or renter's insurance as well. So I think this is a huge deal for Lemonade. I'm very excited about this announcement. Excited to see where we go from here, but my sense is this is very early stages of something that I think we'll kind of look back on in history and say, yeah, this was a huge kind of pivot point when Tesla essentially allowed Lemonade to have access to their data and price their customers appropriately. So very exciting day, and just wanted to share my thoughts. I'm sure we'll do some more deep dives on this in the future, but wanted to get my quick thoughts out today. So with that, I'll say bye for now.